Hi everyone, it's Mariella again from Binary Option Sheriff, and today I decided to discuss a little bit what is a trending market. I've been asked several times by subscribers on this channel to explain what a trending market is, especially in relation with using auto traders. I always recommend that you use an auto trader or a signal software when you have a trending market as opposed to a ranging market, and I will explain what both kinds of markets they are and when it is the ideal time to trade. So let's start with a ranging market. A ranging market is when it's a dead market, basically. So you have a dead market which looks something like this. I prepared this graph. We have the full write-up. You can click on the link below and you have the written version of this video. But basically, a ranging market is where the price keeps going at the middle price, and so there is no clear indication whether the price is going to be going upwards or downwards. We do want a ranging market to avoid those time parameters altogether. A ranging market happens, generally speaking, either outside a trading session, so very early in the morning before a trading session starts, or very late in the evening or late afternoon when a trading session of any particular session, whether it's the US trading session, whether it's the Asian trading session, or whether it's the GMT trading session, irrespective, but within those time frames, and there are times when the sessions overlap, that you have a very inactive market. So, for example, if you're looking at the euro and US dollar, the euro is obviously more active during the Greenwich Mean Time, the GMT time, whereas the US dollar is more active during the American session. Now, you also have Monday mornings are usually very quiet. No major news announcements are usually made on Monday morning, and the traders are slow and sluggish and they don't like to trade after a heavy weekend. And then you have Friday afternoons when everyone is packing up and thinking of their weekend. So these are the time frames where you have a ranging market, which is when you don't want to trade, and I will explain why you don't want to trade. A very simple reason is if you're trading binary options, which is mainly what we are focusing on, but it's the same principle for Forex, you have a price that is zigzagging up and down, which means if you take a price, if you take a trade anywhere in this price range, there is a very good chance that you will see that you are going to be going in and out of the money in very short parameters. This is a chart with a 1 minute candlestick, so each bar is showing what happened to the price every minute. So this would be basically from 7 o'clock. This is what happened in half an hour. So if you're taking, for example, a trade, a put trade, and you pick it somewhere at this point for 15 minutes, the chances that you will be out of the money 10 minutes later here are very big, because the market is not showing any particular trend. It is just moving sideways, as we call it. Now, what is a trending market? A trending market is something which is clearly indicated in this chart here, where we are seeing a direction. The direction is absolutely clear and it's going downwards. You know that there is a direction because in the case of a downtrend, your lower lows keep going lower. So, you have this low is lower than the previous, whereas this low is lower than the previous. Here is the same thing. So we have in this situation quite a clear example of a downtrend, even though here it looks like the price went flat. How do we measure a downtrend other than looking at a chart and seeing it with our own bare eyes? There are also signals which can help us to find exactly a downtrend or an uptrend, and to find out what a trending market is. let's have a look at an actual chart live, and I will show you how to use the indicators as well. So here I am looking on the NetDania chart for the euro US dollar. Today is April the 15th, and I am looking at a very flat chart here. On my eyes, I can see that it is a flat chart. However, if I want to be sure that this is a ranging market and not a trending market, I can apply two indicators. The first indicator is the average direction index indicator, or else it's called the ADX. Now, how do you find the ADX? Very simple. This is where you can find your signal. So all you have to do is you scroll down, you pick the ADX index, and here we are, we have the index. Now, what does this index tell us? Basically, this index measures the strength of a trend. The strength of a trend is measured from 0 to 100. Generally speaking, anything over 25 is considered as having a trend. So, in this case, we have lower than 25. In fact, we are looking at a 14 volume range, and therefore we are confirming that this is a ranging market, and therefore we do not really want to take any trades because the price can keep going in and out of the money. When a price is, let's look at another chart and find some stronger indications of directions which would be clear, and then we can plot this ADX index again. Perfect situation. Now, if we look at this chart, which is the currency pair of the US dollar together with the Japanese yen, and we plot once again the same indicator, the ADX. So we're going back to our ADX, and this time we can see that the ADX is 27. Of course, over our eyes, we can see that this is following an uptrend. It's gone flat for a while because the indicator always shows us, but we are looking here at a 30-minute chart, which means that every candlestick signifies 30 minutes. We have a very clear uptrend going here. And there is one other important thing, however, that we should be noting, and it is that this ADX measures only volume. It doesn't show us direction. It just shows the strength of the market. So in this case, there is a trending market because it is already on a volume of over 25. Naturally, the closer it goes to 50 and over 50, then we know that we have a much stronger market. This is already showing that there is some trading volume. Then there is also another tool that we can use, and it's also available on the NetDania station. So here we are seeing another example. This is a little bit historical from this morning when I was preparing this review. And here we have an ADX which went all the way up to 38 in strength, and it was actually a downtrend. And then we were looking at a flat market for a while, which started going back up to 30 at the point that we took a snapshot of this chart. So, as we can see, the ADX does not give us the direction, but it gives us the strength and the volume and the intensity. Now, there is another indicator, and this indicator is called the simple moving average. The simple moving average will give us this time also the direction and the strength of the market as well in terms of how it's trending. Let's go back to our real-time charts and see how we are going to plot three simple moving averages of different volumes. We will take one with 10, one with 20, and one with 50. So this is taking the averages, an average of 10, an average of 20, and an average of 50. And you're probably asking, why do you need three? We need three, so we take three different time frames and we converge them together. When we converge them together, if they fan up in the same direction and in the same intensity and strength, then we know which direction the market is going and how strong it is. Let's try to do this together in real terms on a chart. So we go back to our NetDania chart and we are going to plot on this same chart, because this has some, let me try to find as much volume as possible so that we can clearly see the indicator. So this time we are going to do the simple averages. So we look for the simple averages at the bottom. So here is the simple moving average. Here it's plotted already, it chose at 20, but actually I would like to choose at 10. So my setting, I'm going to take it to 10. You see the direction changes immediately, and for the sake of our example, we are going to put this in a blue so we can see it clearly. So we can already see that the uptrend is very clear here with this blue line, but this is the 10-minute average that we are taking. So now I'm going to take another one. Once again, simple moving averages. We go to the bottom. Here I plot another simple moving average. This time again, I want the 20, but I want a different color. So all I have to do is go back on the settings, pick my style and change the color into a purple one. And we are going to explore what this is telling us in the end. And now I will plot also the third SMA, or simple moving average as it is called. Here we are. We want a 50, and we want another color so we can see it clearly, and we'll take the pink. Right, so let's explain what these three new lines, three new time parameters are showing us with this indicator, the simple moving average. If you see these two, they start fanning out. So we have actually the three lines plotted, and the longer term, the 50-minute term, is obviously the average is moving, is always a little bit flatter. Here we can see that we definitely have an uptrend, and when the uptrend is following, in this case we have plotted three time frames starting from the 10 to the 20 to the 50. We have the blue, the purple and the pink. Whenever we have the smaller lying on top of the middle and the middle lying on top of the longer term, then we know for sure that we have a trend that is set. In this case, as we can see, the three of them are sitting on top of each other. This was not the case here when the market went very flat. It was also not the case here because the pink line, which is the longer average time, crossed our previous indicators, and we had the same situation happening in this case. So we have now a clear trend, trending market being set at an uptrend, at an upwards trending market, and this is the time frame we want to choose to be working with our signals, with our software, with our auto traders. Remember also that it is very important that other than understanding what a trending market is, that you always check the economic calendar so that you will see that within the time that you are going to be trading, there is not any impending news update which can upset a trending market and suddenly throw the price in a completely different direction because of sentiment. I have prepared another video tutorial on how to trade with sentimental analysis and how a market can move and how you should be checking your economic updates. So if you just subscribe to this channel, you will find all this information already available for anyone who would like to have this information. I hope that this tutorial about understanding what a trending market is and why it is important to trend in a trending market as opposed to a ranging market. Now my cat comes in. Sometimes it's the dog, now we've got the cat as well. So hello from everyone in the Sheriff family. And of course, this is very important to understand that there are time parameters when to trade and when not to trade. This is particularly important for all the questions I get asked whenever I am using a signal software which works for me and does not always seem to work. To traders, especially new traders who are not understanding the time parameters that I am choosing to trade with an auto trader as a signal software, and I think this should answer your questions very clearly of what you should be looking out for when using a signal software. You do not just switch it on and just use it as a push button in the hope that it will get you profits. Some form of education, and this is what I hope I am providing with these tutorials, goes a long way into avoiding falling into pitfalls that can become disastrous if you're trading with real money and not on demo and losing money. Remember that trading can be profitable. It is a legitimate business. However, it also exposes you to quite a lot of risk, and the risk of losing your capital is also a very real one. So always trade with caution and utilize your money management. Never trade more than just 5% percentage of your capital, and these are all important things to note in conjunction with using a signal software. I hope I haven't been too long going on about this, and that you have found this tutorial as useful as I am sure a lot of people are asking the same questions out there. Thank you. Subscribe to our channel.